So if the banks do not change, let's change the banks.
This is Jack Ma, the founder of Alibaba and Group. Group is now targeting a valuation of over $330 billion to be the biggest IPO in history.
If I could travel back in time to that conference, I would tell him, hey, you're being too humble. What you're about to change goes far beyond just the banks. Today, Group, whose main product is Alipay, has 1 billion users, handling more than 18 trillion transactions last year. That's equivalent to the GDP of the whole European Union. So, how did they get started? And what made them so successful? Welcome to my channel. This is the founding story of Group. A side note, because Group is Alibaba's spin-off since 2011 and Alipay is the main product, I might use these three names interchangeably in this video. The story begins in 2003 when Jack Ma created an e-commerce website. In case you're not familiar with that business line, today it is the largest e-commerce player in the world with 1 trillion online sales, 3 times the size of Amazon's gross sales globally. Different from Amazon, who's more like a reseller, first purchasing the inventory and then selling to customers. Alibaba actually doesn't own any inventory, and is a pure marketplace whose main role is to connect buyers and sellers. Back to our story. So, when their e-commerce was starting out, the site gained a lot of traffic, but no one was making purchases because people were concerned about not receiving products after paying the merchants. Apparently, in order to grow the e-commerce business, Alibaba had to figure out the payment solution. To be precise, not just how to pay online, but how to convince someone to pay a stranger 1,000 miles away. Or, putting another way, the core problem they needed to address was trust. Alipay was born in this context, which was essentially an escrow service. Users paying Alipay who held the money, and only after goods were confirmed received would Alipay release the fund to the seller. It sounds easy, or stupid as some people describe it, but it worked. By 2005, 70% of transactions on their e-commerce website was via Alipay. So problem solved, right? Yes. But they didn't stop there. If they can facilitate transactions on their own e-commerce website, why not for all online payments? Thanks to the large user base they accumulated in the past 2 years, which equipped them with more bargaining power, they quickly expanded into a payment provider for a range of online and offline business transactions. By the end of 2007, 30% of Alipay's transactions came from partners outside their platforms. And by 2009, they were serving 500,000 partners and 200 million users. While they were happily welcoming more and more users, complaints from unhappy customers also started to pile, because the user experience back in time was honestly pretty awful. I am a registered user since 2008. I still remember the period where I needed to jump through 7 pages to complete 1 transaction. The user journey was something like this. I placed an order, then directed to the bank online payment system where I needed to key in my credentials, put my security key, then the bank confirmed the transaction, then Alipay confirmed, and finally the e-commerce website confirmed the order. You can imagine any steps in between will lead to a failed order. In fact, the completion rate at the time was no more than 60%, also meaning that they were leaving tons of money on the table. Clearly, in order to reduce friction, they had to get access to the bank's online payment platforms. In other words, banks needed to build an infrastructure so that Alipay could access. Well, asking banks to do anything is hard. In this case, for good reason though. For one, pre-investment is not small. It's going to take some time for banks to make profits. Secondly, banks were also concerned about online transaction losses due to fraud. To tackle the challenge, they visited 160 banks, one by one. After rounds of negotiations, finally gained agreement because of several compromises they were willing to make. First, Alipay promised to prepay service fees so that banks could lock in profits. Secondly, they also placed a deposit so that banks didn't bear the cost of any risk doing the online transactions. Eventually, in 2010, they launched the upgraded service called Quick Pay, which essentially allows users to complete transactions within Alipay's interface. This revamp immediately improved their completion rate from 60% to 90%. I personally found first chapter of Group's founding story fascinating, because at its core, what Alipay has enabled is not just an online payment platform, but a trusted system in the society, which has also underpinned the development of e-commerce in China. Every single dollar of the 18 trillion transactions they processed last year is a manifestation of trust. Now we're still in the late 2000s. Despite staggering growth year over year, Alipay wasn't complacent over their success in the web. In 2009, their mobile app was launched. 10 years later, they have more than 700 million mobile payment users. That alone is more than the rest of the world combined. I think two things that Alipay did over the last decade has contributed to their massive success in mobile payment. For one, they shifted from a pure online payment service to a super app that provides a full array of services. Over the years, Alipay has unlocked numerous features, not just allowing users to pay for anything digitally, literally anything, like phone bills, utilities, traffic tickets, subways, buses, taxis, vending machines, you name it, but also expanding the use cases for daily life needs, like passport application, doctor appointment, tax filing, marriage registration, library book borrowing, and the list goes on. The access to an extensive range of services has certainly helped Alipay acquire more users. I have to say I started to appreciate even more after moving to the US, where I have to type my credit card information every time I make a purchase on a new website. I honestly cannot think of one payment use case in China where Alipay is not an option. If letting users get used to paying digitally is no easy feat, making business owners accept online payment is even harder. Like in the US, digital payment providers such as Apple Pay and Google Pay aren't everywhere, especially in mom-and-pop stores. Why? Because of the cost. At a minimum, merchants need to pay for a terminal, which costs at least hundreds of bucks. So, if Alipay wanted to make mobile payment universally accessible, they had to think of a way of making it extremely cheap, or even free. And that's exactly what they did, the launch of QR code payment solution. For users, they scan a QR code of a merchant, confirm, and that's it. For merchants, a piece of paper is literally what it costs. So if you get to visit China, please don't be surprised when you see some homeless people also accept support via Alipay. This is pretty significant for merchants, not just because it saved the payment cost, but also the operating cost. For instance, the fast food chain KFC estimated that by using mobile payment, they were able to save 8 seconds per customer, which allowed them to serve more customers and earn more as a result. And on top of that, to reduce labor cost by reducing number of cashiers. The impact is even more remarkable for small business owners if you think about that. With digital payment comes data about customers. How frequently they visit, how much they pay per trip. These valuable data insights, which weren't available otherwise, empower merchants to understand their customers better and ultimately help them grow their business. And lastly, mobile payment has also transformed how the society operates, moving China towards a cashless country. We have to know that cash is not free. A lot of people need to design it, print it, secure it, and distribute it. Every step has a cost. Not to mention, the average lifespan of paper money is merely 3 years. It's estimated that cash on average costs 1% of a country's GDP. Being cashless is definitely an economic gain for our society in general. So Alipay was created to facilitate online shopping. Besides growing payment transactions, they were also hoping to help merchants get access to financing so that they can sell more. But for small business, getting loans from banks was extremely hard. Though it makes sense if you were the bank. For one, small companies have few credit histories, meaning high default risk. Because of that, verifying their credit also entails more labor costs to do the due diligence. High risk, high cost for small amount of loans. No wonder historically banks only care about the big enterprises. Banks didn't care, but Alibaba had to, as most merchants on their platforms are small and medium businesses. So in 2010, Alibaba registered 2 microloan entities which can approve loans in a 310 format, which stands for 3 minutes to apply, 1 second to get a decision, and 0 human review. Despite no human review involved, their delinquency rate has remained around 1%. below industry average. Why? Well, the reality is they have more data than traditional banks, not just a sales number, but also data like inventory, sales seasonality, package return rate, store rating, and etc. Those information has enabled Alipay to build powerful intelligent decision-making systems and risk management systems. To grow their loan business to another level, in 2015, Ant Group partnered with other financial institutions, co-founded Mind Bank, a private commercial bank, so that it can serve more customers. As of June this year, they've issued $63 billion to over 20 million companies, making Ant Group the largest credit services provider for small and medium business in China. So, small business weren't the only group that had difficulty getting financial services. The majority of the general population were also underserved. Even in the year of 2015, only 1/4 of the Chinese population had credit scores, compared to nearly 90% in the US. Only 12% of household assets in China were saved for financial investments versus 43% in the US. And you may say, isn't that because Chinese people love saving? This might be true, but it's also because the threshold of investment was quite high for most people. There was a minimum threshold for investment, where money was usually locked up for some set period of time. In my early 20s, I never managed to save to the amount that matched that threshold. As the story goes, not surprisingly, Ant Group came up with a solution. In 2013, they launched the Yuebao, which allowed anyone to invest as little as 1 RMB, that's 15 cents, and received interest daily with a 60% annualized rate of return. And you can do withdrawals and deposits 24/7. The product exploded in popularity. Within a year, it became the largest money fund with 85 billion assets under management. The previous largest money fund used 16 years to reach that scale. In addition to wealth management, Ant Group also made a foray into consumer credit business. In 2014, they launched Huabei, which is a digital credit card, and in 2015, Jiebei, which is a consumer short-term loan. I will do no justice to tell how amazing the user experience is. This is a demo of me trying out the feature. So I click on Jiebei. It immediately showed me the amount of money that I can borrow, 156,000 RMB. That's $24,000. Quite a lot, with a daily interest rate of 0.025%. Then it takes 2 more clicks to confirm the request. So, depending on your credit scores, the loan limit and the daily interest rate vary. But you get the point. Since Alipay knows so much about my consumption behaviors, credit history, or just me as a person, because you remember, I use Alipay for almost everything. Their intelligent decision-making system makes the instant loan possible, and the dynamic risk management system has also maintained a better than industry average delinquency rate. What I wanted to highlight in this chapter is Ant Group's dedication to serving the unserved and underserved. That's actually how they got a name, Ant, to focus on small customers. And they did achieve it by digitalizing and democratizing financial services, which has eventually benefited the traditional banking system. So, Jack Ma did deliver on his words. They changed the bank and the financial life of 1 billion Chinese users. That's the end of their founding story. Now let's take several more minutes to discuss what has contributed to their success. Here are my 3 takeaways. Number 1, favorable external environment. Alipay flourished in a period when regulation was behind, which has led the company relatively free to test and commercialize products and services. For example, it was 7 years after Alipay was born that it was officially licensed as a payment provider, and it was 5 years after the barcode-based payment solution was introduced that Chinese regulators produced an official standard on management requirements. To clarify though, when Jack Ma started out, it wasn't obvious at all. I mean, we're talking about China and the financial sector, which is strictly regulated everywhere. As Jack Ma once confessed in a speech, he was mentally prepared to go to jail when founding Alipay. So the way I interpret the success factor is fortune favors the brave. Number 2, technology. During last year's Alibaba's shopping festival, Singles Day, $38 billion sales happened in 24 hours. To give you a sense of how large 38 billion is, that's more than the annual online sales in Brazil. What's even more impressive is that $1 billion happened the first second of the day. so you can imagine the strong technology infrastructure it demands to support such massive operations. Instant loan is another great example. Alipay's ability to offer no waiting time for loan applications while maintaining low delinquency rate comes from their incredible risk management systems, intelligent decision-making systems, as well as fraud detection systems. It's fair to say that without the leading technology, the scale and the significance of their business simply wouldn't be possible. That's probably also the reason that their company's name got changed from Ant Financial to Ant Group this year, as financial isn't their core competitive advantage, technology is. Instead of competing with banks, their goal is to leverage the technology to empower financial institutions, serving more customers. Number 3, growth mindset. If the bank doesn't change, let's change the bank. This quote did show Jack Ma's ambition, but you can also tell his frustrations behind the lines. What I really admire about this company is their competence of turning every obstacle to an opportunity in their favor. No online payment solution, they created one. Low completion rate because of no connections to the bank online payment system. They visited 160 banks and signed the deals one by one. Too expensive for offline merchants to adopt online payment. They invented a QR code solution. No access to financing for the merchants on their platform. They started a credit business. Ant Group was born in a year of SARS. Their lending business started in the year of 2008 financial crisis, and they survived and thrived. This year has been frustrating for all of us, and I think Ant Group's story is more relevant than ever. It has told me, be hopeful, because opportunity is very often in the disguise of those challenges.